Hej! Här kommer vår första intervju från vår nya podd Future Skills. Det är med finansmiljardären Martin Sandquist som vi intervjuade i avsnitt 93.
Ja, det var ju 25 minuter här då. Och det blev ett av våra mest populära avsnitt av en god anledning. För Martin berättade bland annat om 15 böcker som är rekommenderade, livet som grundare av en stor hedgefond, alltså Lynx Asset Management, och en jäkla massa annat. Så lyssna på det avsnitt om du inte redan har hört det, avsnitt 93. I den här nya intervjun på Future Skills, då berättar han på engelska bland annat om sin skepticism mot kryptovalutor, de 4 favoritindikatorer som han har för att mäta marknadens momentum och hur han ändrat sin uppfattning om fourth turning-teorin.
Martin berättar också om sina åsikter om marknaden just nu, inte minst om centralbankernas policy, och han utvecklar också varför det är svårt eller dumt att shorta marknaden just nu. Han berättar också om varför han vill vara ensam när han tänker och inte jobbar ihop med andra, och en massa annat.
Så lyssna på det här avsnittet, första intervjun av Future Skills.
Risk is sort of like energy, or you can't create or destroy energy, you can only change it. In the same way you can't get rid of risk, you can only push it in time. Since we've been pushing this for such a long time, it's going to be really, really, really bad when it sort of finally explodes here.
Martin Sandquist is one of the 3 founders of the immensely successful hedge fund Lynx. In the late 1990s, Martin teamed up with 2 of his colleagues at the bank to form the trend-following, algorithmic managed futures fund Lynx. Over the next 2 decades, Lynx racked up over 500% returns and made each of the 3 founding partners into a billionaire. Hi Martin, how are you?
Good, how are you?
Last time we talked about cryptocurrencies and you're quite skeptical. Could you elaborate a little bit on why?
I'm skeptical against cryptocurrencies, but I've sort of nuanced my view on blockchain technology, and now I actually think that blockchain is going to be quite disruptive in many ways. But I still don't think that cryptocurrencies or Bitcoin are going to be a viable application. I mean, I see blockchain as sort of an internet 2.0. I mean, we had internet that was a decentralized way of sharing information, and I think blockchain is a decentralized way of keeping track of ownership. So I mean, that's a really good thing. But then we have applications on these, though, like Bitcoin, and we have Facebook on the internet. But I mean, Bitcoin is supposed to be a currency, and the thing that doesn't make Bitcoin work as a currency is that you don't have a scarcity the way that they say you do. I mean, they say you only have 21 million Bitcoins, but you can fork them infinite amount of times, and you can create as many altcoins as you want. So you don't really have scarcity, and you also don't have any intrinsic value in a Bitcoin. You have intrinsic value. There's value in the network, much the same way as there's value in Facebook, but you don't have that by owning a Facebook account, like the same way you don't have value by owning a Bitcoin. You can't do anything with your Bitcoin. So you don't have intrinsic value and you don't have scarcity, so it makes it very difficult to use as a currency. And it's not being used as a currency now, it's just used as a speculative asset because it's too slow and it's too expensive to transact in now. So it's lost all its purpose, and yeah.
I think what you're saying about the fork is pretty interesting, because if you look on Wikipedia, if you look on Forkster, they don't have a lot of good information. All they say is it's
just
happened.
A picture of a fork there.
Yeah, but it's like they're not. It's not going to give you an impression that that's something that can happen. If you look at the page, it's like it's happened, but it's no explanation of what it means or that it could happen again or why.
Yeah, and I've heard the explanation. Well, you know, it's just a couple of forks. It's not going to happen again. But I mean, who knows? I mean, they've forked it 2 or 3 times, like just last year. And some people argue, well, I mean, they create fiat currency much faster than that. But I mean,
even if they do keep forking, even if they fork 100 times, does that really matter? Since one of the forks, one of the iterations of the Bitcoin could be the winner. What they're doing is going through a Darwinistic process to find the best sort of Bitcoin.
Yeah, I mean, that could be the case, but then you don't know, how would you know which is the winning fork?
Oh, no, you don't. So you can't buy it now as a store of value.
Exactly. I think blockchain is going to persist and be a really interesting technology, but I don't think it's going to work by using tokens and miners that we have today. I mean, we have this new, I don't know if you read about Hashgraph. It's a new technology where you don't even need miners, you don't need tokens, you still have this blockchain network. So, and I mean, if you can relate it to internet, I mean, I think it's going to be the way we pay for internet. Today we pay for internet through ISPs, internet service providers. You pay a small fee and you get access to the internet. It's going to be the same way with blockchain. If you want to use an application for blockchain, you're going to pay a small fee, and maybe you'll have miners that compete for that fee in a pool or some way. But there's not going to be a need for a very expensive token the way it is today.
Your best guess of this is that even if you could pick the ultimate winner, that winner would still not have a significant value per
no,
per
I
unit.
think it might have a small value, much in the same way as, I mean, you pay a small fee for accessing the internet, but it can't be a huge value, I don't think, because of these things that we talked about. So,
do you have any interest in investing in this like a so-called China trade, where like the saying goes that if you have a product and if 1% of the Chinese buy it, then it will be very valuable. Anyway, are you interested at all in putting any amounts at stake here in cryptos?
I would really like to invest in sort of firms that get involved with the blockchain technology. There's one firm in the US called Symbiont, which tries to identify technologies that are going to sort of try to take out the middleman, because that's where I think the big winning sort of aspect of blockchain technology is, where you can eliminate middlemen like banks and credit card companies, I mean lawyers and exchanges, all these things that cost a lot of money that can be done more effectively through a blockchain technology. That's going to be very interesting. So I mean, firms that get involved in that. That's I mean, that could be, there obviously going to be some huge winners here, but it's hard to say who they're going to be.
What's your view on initial coin offerings as a shortcut for venture capital?
Yeah, I mean, I'm not going to say that it's going to completely disappear, but there might be still some niche where you invest money and you get a token that you can use in that application. But I mean, when I invest in a company, I want to get part of their return streams, and that you don't get that by an ICO. You just get a token that you can use in their application. So I mean, but there might still be some, you might still be able to do ICOs, and there also you have all these hacks that I read that 10% of all the ICOs have all the ICO money that has been raised has been hacked and stolen. So that's not a.
I also think that the SEC is preparing a case against, I think, the largest ICO, since it's you're not supposed to raise money this way if they are considered equities.
How did you first get into finance? What was it that made you think that this is something for me?
I mean, I was always interested at a young age. I had charts plastered all over my wall, my boy room.
It's
walls.
pretty unusual.
but I can't explain where it came from. But none of my parents have this interest, and my brothers are all in film and movies or in the music. So I can't really explain why. Something has to do with the part of being financially independent and doing stuff on my own. I always loved to do stuff on my own and have sort of total responsibility. I always hated the sort of group work in school where we sort of had to share responsibility, and I played the goalie when I played soccer because I didn't want to have teammates. So that's part of it.
Did you have a lemonade stand?
No, I wasn't that entrepreneurial type. I'm not really an entrepreneurial type, but I always liked the independence of trading, and also the fact that you're always judged by just the market. You're not judged by a third party, which is the case in most other occupations. You have to have somebody else evaluate what you're doing and have an opinion on it, and there's a third party evaluation. That's not the case in the markets where you're only competing against sort of this invisible market and yourself. So, and you're always getting judged day by day, and there's always also a direct correlation between your skill and the outcome. I mean, there's a lot of luck also and noise in the interim, but that's a really interesting part. That, I mean, you can be a skateboarder or a great musician, but it doesn't mean that you're going to make a lot of money or be very successful because you have this sort of third party that's going to evaluate you. I mean, I see this all the time on the TV shows, and people sitting on the subways who are amazing musicians, but they might never make it because of luck and other factors. But so that's what I really liked about the markets, that there's a more direct connection between your skill and your outcome.
You've said before that you like looking for the truth and also making predictions, which you need to know what the truth is in order to make predictions that work, that are practical. Did you understand this basis for trading early on, or is it something you've come to think of later on?
No, I think I sort of thought about that afterwards, and this sort of truth-seeking aspect really became apparent to me later on when I was getting interested in science and different kind of theories and all that stuff. And I saw the relationship with trading also. But it came a bit later on. As you mature, you understand more of yourself and who you are. But
it seems to have entered other aspects of your life. So you're not, you are looking for the truth in a more general sense as well. I'm thinking of books like The Fabric of Reality that you recommended, for example.
Yeah, exactly. I mean, but most of it is just my love for theories, and I mean, The Fabric of Reality deals with the theory of quantum mechanics, and I mean, we have two great scientific theories: the quantum mechanics and the relativity. And The Fabric of Reality deals with the many worlds interpretation of the quantum mechanics, where the Everett theory, where you have multiple universes all the time sort of coming into existence to explain the sort of the strange behavior of quantum mechanics. So it's a very interesting theory, but it's very strange also. So
it's pretty far off from predicting the movement of a share price.
Yeah, exactly. But there's also, you're also trying to find truth in patterns, and I mean, prediction is a way to validate a theory. That's how you validate a theory. You make predictions, and if it's a good theory, it makes pretty good predictions. Maybe not 100%, but fairly good predictions, and so they belong together, theories and prediction, in that way. So
I would like to backtrack a little bit. So we have you there, like 15 years old, maybe a boy with charts on its walls. How do you first get started with the market? Do you just like read the paper?
Yeah. It started like that. I read the papers. I saw all these numbers in the back of the paper, and I wondered what's that. That was interesting. And then when I realized that you could make money by predicting where these numbers are going, that made it even more interesting. So I started the usual way. I started reading about fundamentals and company reports, and my dad opened an account, and we bought some shares of some stock, and so that's how it grew, really. And I mean, I was really crazy at that time. I mean, people had posters of Def Leppard on their wall, but I just had charts on the wall, and people thought I was totally mad. What are these charts? But then you evolve. I mean, I realized that fundamental analysis wasn't really for me, so then I started to read about technical analysis, and that's where it really clicked for me, because I'm a much more visual person, and technical analysis really struck a chord with me, and that's when I really knew that this was something I wanted to do. Then I didn't know about at that time that you could actually make a living from it. That sounds strange today, but back then I only knew of 3 occupations in finance. It was either you were a broker, or you were an analyst, or you were a fund manager picking stocks for a mutual fund. And I mean, I didn't want to do any of those. I just wanted to trade. So I thought I was going to trade on the side and have a real job as my main income. So, but then when I got to like 25, I realized there was this prop trading groups that you could work for, where you could trade for the bank, or you could start a hedge fund and all this. So that's when I really sort of thought that maybe I should do this for a living instead of.
How do you view fundamental analysis these days? Do you think it works?
Yeah, I think it's the wrong question to think about whether fundamental analysis works or technical analysis works. I mean, there are aspects that work and aspects that don't work. I use maybe fundamental analysis like 10% of the time. That's 10% of my input into a trade, and the other 90 is sort of pattern recognition and technical. But I mean, that's more because I'm not that good at fundamental analysis. If I was better, I would use it more. But I can't say that it's something works or doesn't work. It's more, it works if you're good at it. And I mean, there's 90% of technical analysis that doesn't work. So you can't say that works either. But it works if you become good at it and specialized at it.
This is really interesting, to become specialized at it. So you said you were more visually oriented. And this is something that you understood. Did you understand this at an early age?
Yeah, I think so. I mean, like I said, when I was 15, I started reading, fundamental analysis and company reports, and I just couldn't really get my head around it. I couldn't. It wasn't something that clicked in me. So it took some while. But then I found the technical analysis when I was 16. We went to high school, and a friend of mine pulled up in a Porsche And I was like, so yeah, how did you buy that Porsche? Yeah, I use technical analysis. Okay, I might want to look into that.
That's crazy.
So he really got me into that, and I started reading about it, and I just became fascinated with the patterns and everything. So
could you walk us through your process when you do research?
All sorts of approaches. I used Elliott wave analysis for a long time. I've looked at everything under the sun. But then after a while, I just started to recognize that some things didn't contribute to my predictions. So they didn't make any. I mean, even though I had spent like a few years on Elliott wave analysis, I was the expert. I mean, I knew everything. I'd read about it day and night. But after a while, I was just like, this doesn't add anything to my bottom line. It doesn't add anything to my predictions. Even though it's a great theory, I think it's valid in some sense, but it doesn't help me in my predictions. And then I have to discard it. And I mean, that's a really hard thing to do. And I still do that a lot. I have some favorite patterns that I just throughout the other year that I've been using for a long time. But after a while, I just realized that they don't work anymore. Something has changed. So I have to get rid of them and just focus on what adds to the bottom line. And that's, yeah.
I think there might be like a sense of being lazy if you use too few variables. And I think that's like a wrong that many fundamental researchers do. They want to add anything that might have even the slightest theoretical input into a model, and then they just keep collecting data series and never discard any series, especially if they on paper seem to be the most important, like sales or cash flow or price earnings.
Yeah, no, definitely. It's a hard thing to sort of, especially if you've been doing something for a long time and you're very, very good at it, and it's hard to sort of to kill your baby. Yeah.
What does that mean, by the way?
Elliott wave analysis.
Yeah.
It's a wave theory of the markets, which says that the markets proceeds in a series of 5 waves ups and 3 waves down. And it's a fractal pattern where you have waves within waves within waves, and you can sort of this is a framework where you can make predictions on how the market's going to go according to this theory.
And you can kind of always fit an Elliott wave to a chart.
Yeah. That's exactly. That was my. It looks very good, and after the case, you can see. I mean, this looks like a perfect wave, but it was very hard to use it in real time and make predictions.
In theory, it also kind of holds water because it's mapped to human psychology, and therefore it's very easy to become a fan of Elliott wave analysis.
It's a fascinating theory. That's why I fell in love with it. But
you could probably fit the 5 stages of grief to the down waves, and then some other kind of positive on the upside.
But you've said before that it's very important to gain an edge, and so you realized you were visually oriented, and you also realized you like technical analysis. What did you do to expand upon that? Did you maybe come up with some systems to use this talent of yours or practice it in different ways?
Yeah, I mean, I tried to practice it and also try to come up with the things on my own. I've always been sort of a synthesizer in that way, that I read a lot about what other people are doing. I know you had a question about role models here. My biggest role model in trading is Linda Raschke. She's a trader in the Market Wizards, and I modeled a lot of my approach based on her approach. Pattern recognition, where you sort of you try to find patterns and always revise your library of patterns to only keep those that are contributing to your results.
Is this someone that you know about, Mikael?
No, and I've actually read at least one Market Wizards, but as we discussed last time we met, Martin, I didn't like Market Wizards, but I'm guessing more and more that I should reread at least one of them.
I think she's in the new Market Wizards, the second book. She's not the biggest trader in the world, I mean, but she's really fascinating. And the case that she's a woman is also, there's very few women traders, and she's one of the best.
I also like to read a lot and synthesize. Do you have some process for doing it? Because for me, at this point, I feel like I'm becoming so much better at it all the time. And it's a really nice feeling.
Yeah.
But it's becoming intuitive. But I have practiced it a lot. I've used all sorts of crazy learning methods and memorization stuff.
No, I don't have a method for it. It's I just try to be an infinite learner, or sort of a learning machine, and sort of try to learn all the time. And the fun thing about that is the compound interest effect that you have on learning. I mean, Buffett said that the compound interest is one of the greatest wonders of the world, and I think that's true. But it's also true in terms of knowledge and learning that. And I mean, you're still very young, Ludwig, so I mean you're going to be way smarter than us when you come to our age if you keep this learning pace up. So
do you read with a pen or a highlighter in hand, or do you just read?
I read books.
Yeah, but do you, when you read, do you do anything to remember?
I have my phone, so I write down on my phone if there's something interesting that I want to remember or do more research on. So I put that down into the phone, and I do. Usually I read it at night before I go to bed, and I also read a lot in the bathtub, like Alan Greenspan. So all my books are wrinkled and sort of destroyed because of all the reading in the tub. But I love lying in the bathtub and reading. That's my favorite.
And is it mostly to collect information and knowledge? Like, is this a directed activity for you, or is it more for entertainment, but you like things that also contain information?
Yeah, I think it's a bit of both. I mean, I love learning things. I love it's fun to dive into a subject that you can have an opinion on, you know, talking at cocktail parties and stuff like that. But I have to admit, I have a bit of a bias. I think this is a sort of work hazard. And when you're in trading, you're always looking for the variant perception in the market. You're always looking for the other opinion that's sort of contrary to everybody else. That's where you can make a lot of money, when you have an opinion that's not in the price in the market. But this sort of spills into my other stuff. So I always love issues or sort of topics that where I can have a opposite opinion to the conventional wisdom. But my wife really gets annoyed at me. She's always like, why do you always have to have a contrary opinion to everything? It's so annoying. That's the fun part. I mean, it's not fun to agree with everybody. It's more fun to sort of have an opposite opinion. How
did you meet her? Did you ask her at a cocktail party what her favorite interpretation of quantum physics is?
Yeah, exactly. That was my pickup line. It didn't work too well, but
but this is something that everyone who's into finance and trading, they're like, okay, what's the magic formula for becoming a contrarian, right? But you have to, there is no formula, correct?
No, exactly. And I mean, it's not, you can't be a contrarian and you're going to make money by default. I mean, it's not that easy. That you just can go against the conventional wisdom. Sometimes it's best to go with the trend and the momentum and the conventional wisdom. But in the end, you have to have an opinion that's not priced in the markets, because otherwise it's impossible to make money.
What's your process of identifying whether you are going with the trend or against the trend?
Well, I have different momentum indicators and stuff like that. I'm always looking for sort of a shift in the regime, so a shift between volatility, low volatility and high volatility, because that usually begets trends. So when you have a period of high volatility and you start to see the volatility come down, you usually go into sort of a more range-bound non-trending market. And the opposite also, when you've had a long period of non-trending, low volatility markets, it's usually time for some kind of directional movement.
So for those who are not professional finance people, what are some popular or normal momentum indicators?
I use pivot points a lot. I use moving averages and breakout levels and stuff like that. But one of my favorite indicators is the ADX, the average directional movement indicator, which indicates just the level of trend in the markets. And you can see very, very clear cyclical patterns there where you have a low ADX for a long time. It usually is indicating that we're going to have some type of movement. And then I try to go with the momentum, and the opposite. When you've had a high ADX and it's starting to come down, it's usually a sign that you were going to go into some more sort of zigzag type of market. So,
talking of volatility, we are recording this just a couple of weeks after Volmageddon. You and I actually had a lunch booked the day after this volatility spike, and you actually canceled that lunch. Could you talk about what happened in the markets and maybe how that affected you?
Well, it didn't affect me that much. I mean, since I trade only my own money now, I can afford to just step aside and be fairly passive, which I did. But it was very concentrated in the equity markets, the volatility. We didn't have much FX volatility or fixed income volatility. So it's, I trade a multiple range of markets, and equities are just one of them. So it didn't affect me that much. But it's very interesting that we see this pattern now. It's the same pattern that we had in 1987, where we had a lot of equity volatility, but not much volatility in other assets.
What happened then?
The crash of 1987. Oh. You were too young then, Ludwig.
It's the biggest percentage drop in the US stock indices ever in a single day. Dow Jones fell by 23% or so.
22%, something, yeah. So, we could be facing something similar to that now, and there's a lot of other similarities also.
This volatility spike, the VIX increased by almost 100% in just a single day. For me, the first first thing I came to think of was the collapse of the Bear Stearns subprime funds in 2007, about a year before the financial crisis started. Do you see this as something similar?
Yeah, exactly. I mean, I think that's a very good analogy. It's that was in February 2007, much the same way this is February 2018. So yeah, it could be the start of something bigger, and I think it is. I don't think it's going to play out like 2008. I think it's going to more play out like the 2000.com bust or 1987, something like that.
So something more intense.
Quicker, exactly. But I think, I mean, this time central banks are going to jump in sooner and prevent a total sort of market Armageddon. But that's going to in turn ensue a currency crisis, like we talked about before. That I think is that's my vision of how this thing is going to end. It's going to end in a currency crisis and a dollar crisis when central banks go back to easing and printing money again. I mean, now they're on a tightening path, but soon they're going to have to give that up if the market goes down too much.
So is this related to your ideas about fourth turning generational cycles?
Yeah, exactly. I mean, it fits in pretty good with the fourth turning predictions that we're in a crisis period now, and the trigger was 2008, and we're waiting for the climax here. And like I said, I think the climax is going to be some type of collapse in the fiat currency system. Exactly how it plays out, I don't know, but I think, I mean, my bet is on gold, that you should have a lot of gold.
Do you think that what we are seeing in terms of quantitative easing the last 10 years, maybe in terms of a possible end to the petrodollar system and similar movements in the macro world, do you think those are postponing or pushing forward the fourth turning, or don't matter at all?
I don't think it matters that much. I think this would, central banks are definitely at the heart or the root of the problem here, which I think is very important for people to know. I mean, it's because I'm not afraid of sort of Trump or what he's going to do, but I'm more afraid of what's going to come after Trump and the socialist sort of socialist winds that are going to follow, because now everybody's going to blame this on capitalism, even though this is not capitalism's fault. I mean, this is the fault of central planning and central banks and government and on the meddling that we haven't had capitalism for a long time. The Fed has been sort of manipulating prices and markets for a long time, and they've tried to push risk out. And risk is sort of like energy, or you can't create or destroy energy, you can only change it. In the same way, you can't get rid of risk, you can only push it in time. And that's what they've done. They pushed the risk out in time, but sooner or later it's going to come back, sort of like trying to contain a volcano. You can just put a lid on it for a while, but it's sooner or later it's going to explode. And then since we've been pushing this for such a long time, it's going to be really, really, really bad when it sort of finally explodes here.
Since you mentioned gold, it's hard to carry. People want to steal it, and they actually can steal it physically from you if you have it on you. It's hard to hide or conceal on your body. It takes up space. It actually can be mined from the Earth or maybe an asteroid strike. And it's hard to use for small payments. Also, it can only be transferred in person. So how come gold is better than bitcoins?
Well, because now we have the technology to use gold. There's this firm called Gold Money where you can deposit your gold and you get a credit card and you can pay for everything and just deduct small portion of your gold. So now it's actually much easier today with the digital technology to use gold as money in real life transactions. And I mean, you mentioned that gold is heavy, it's hard to carry, but I mean, that's just the thing. It's the most portable money that there is. I mean, everything else would be heavier. Everything else would be more cumbersome. That's why gold has been money, because it has these properties, like it's hard to destroy, it's malleable, it's divisible, and has intrinsic value and everything. So,
is there anything that competes with gold, like platinum or silver, diamonds?
I mean, they all have aspects of gold, but there's a reason why gold sort of has become money, because nothing is exactly like gold. Silver, as you know,
it oxidizes.
Oxidizes, yeah, exactly. I mean, there's a reason why gold has taken the top place there. But I mean, all the other metals are comparable. There's value there too, and you can use them in industrial applications. And gold would be used a lot more in the industry if it was cheaper. Now it's fairly expensive because of the monetary aspect.
So you said Gold Money. Is that Peter Schiff?
Exactly, he's invested in that. He merged his gold company with the Gold Money, I believe. So,
is your interest and investment in gold, is that like a 1% insurance trade, or is it something bigger?
It's bigger. I mean, it's like 10%, 15%, depending how you calculate. But I really think that the easiest way to play this sort of disaster scenario is just by going long gold. I mean, because you can't short the stock market because you don't know how much money the central bank is going to put in or how far they're going to go to save it. So the real play is just by being short fiat currencies and long hard assets, I think.
Do you think holding gold could just as easily double as it could halve in price? Is this just a way of parking money, making sure it doesn't disappear completely?
Yeah, exactly. I mean, I think that's it. It's a way of storing your value. And then, I mean, if you look at history, gold has been an excellent store of value. Like in the Roman times, you can buy a toga for an ounce of gold. Today, you can buy an expensive suit for an ounce of gold. So it's definitely kept this sort of purchasing power, which you can't say about any other currency.
All right. Going forward, no matter what it will mean in terms of dollars, do you think in 10 years' time, do you think you can buy more or less S&P 500 units or more or less square meters of living space for gold than you can now, more or less?
The living space is hard because that's a hard asset also, and I believe in owning sort of land and property. I think that's good. But I think the relationship to the S&P or Dow is going to... In all other crises, whether you go back to 29 or the 70s, we've always gone down to a Dow gold ratio of 1, which is, I think, where we're headed now also. I mean, the Dow divided by gold is going to be 1 or below that. So now we're at about 15 or something. It was at the peak of 40 at the 2000 peak there. So we've come down a long way, but it's still a long way to go, I think.
Oh yeah, speaking of gold as a currency and retaining value, I read this really enticing sales proposition for cryptocurrency recently. And what they were saying was that you would have you would have a hard drive where you would store your cryptocurrency, and then it would have a secret password, and then you would buy a cool ring and engrave inside the ring a special phrase that you would memorize, like a secret agent. And then you would like go around and be location independent and take off your ring and open up your secret vault. And like when you read that sales proposition, it really conjured up images in your head like, I'm gonna be like James Bond.
Yeah, sounds very cool.
But the whole point is this is gonna replace gold, and this is going to be the new thing where it's like everyone is just gonna go around and be location dependent and have their secret storages of cryptocurrency.
Yeah, and I mean they play a lot on that in the crypto world. I mean they have the term mining for the proof of work in the blockchain, and sort of to say that it's similar to mining gold. I mean it could work if it wasn't the case that you could create as many of these cryptos as you want. I mean, and which people are going to do if the price keeps staying this high. I mean, the supply is going to overwhelm the demand sooner or later, and the price has to come down, because if it doesn't cost anything to create new currencies, then I mean, people are going to do it. So.
But one thing that's really interesting is just the psychological position of it, the psychological proposition of what's going on. So like, even if everything you're saying is right, you have a lot of people who have now started to become so interested in promoting this that they'll tell their friends, and because they're invested in it themselves and they have everything to gain from the price going up. So they've turned a lot of people into true believers who are very good salespeople, and it's going to spread like that. And even if there's no real reason, no real inherent value, that can make the price go up in a long period of time.
Definitely, and I mean, I'm not saying that this is over now. I think, I mean, there's a good chance that Bitcoin is going to go to 100,000. I don't know, but I mean, I think if we get a collapse below 3,000 or 4,000, that's going to be 80% correction. I think many markets, when you have that type of correction, it doesn't go back up. Now in Bitcoin, we've seen 70% correction a couple of times, and it's gone back up to make new highs. And now the recent correction was around 67%. So it might not be over yet. I mean, now we're back above 10,000, and I'm not going to say it's impossible that we go to 100,000. But again, sooner, I mean, the end game is that it has to collapse.
Yeah, I mean, you have a very different focus on this and the time horizon compared to like someone my age who's just trying to get rich quick speculating.
Exactly. That's what everybody's trying to do. It's just a speculative asset now. So
many who look at Bitcoin, they use variations of fundamental arguments, whereas since it actually has no intrinsic value at all, it might have a use case, but no real value. But your entire career is built on pattern recognition and analyzing the underlying psychology or the actual price movement. So your approach actually should work better here. From that perspective, you say that, all right, this correction was only 70%. So therefore, it might just as well set new highs. But just you wait and see until you get the first 81% correction. Well, it wouldn't be the first one. I think they actually had like 80 or 90% in the beginning.
Maybe that's true, yeah.
But since it became a little bit more mainstream, they haven't.
And now you have a lot more people that bought into it. I mean, before you had sort of hardcore, die hardcore fans that would never sell. That's why, I mean, you could have a 70-80% correction and people still didn't, they were just going to stick with it. Now you have a lot of people who are just trading it and have bought it at a lot higher levels who sooner or later are just going to cash in and dump.
Whenever somebody says that it should trade at $100,000 or $1 million per unit, they base that on macroeconomical equations like MV equals PQ, which is just a way of saying how much of the economy should be traded in bitcoins and how quickly. Or, for example, if Bitcoin is supposed to rival gold, then the price needs to be 500,000 or something.
But the reason I don't like to trade, I mean, I understand people who trade Bitcoin, but I would never do it because my type of analysis requires that there's a sort of a very large group involved. I heard that sort of like, I think a majority of the Bitcoins, or 50% or more, is held by only 1,000 people, which makes it's very easy to sort of manipulate, and I think there's a lot of that going on in the price when it's controlled by such a few hands, and so that makes pattern recognition not that great.
Do you know anybody who holds a significant amount of Bitcoin?
No. I mean, I have friends who have small amounts, but...
Do you speculate at all as to why, for example, the Winklevoss twins owns so much?
No,
what their play is?
I think they believe in it, and I think I can understand the case for it. People are fed up with the whole fiat currency system, and I think that the starting point for it was this sort of libertarian view that the central banks are printing too much money, and we're going to have the fiat currency doesn't work, so this is better because it's a scarce amount and everything. So. But I don't think they've thought it through the whole way.
I want to go back to the fourth turning theory. And there's one thing that I'm wondering if you've thought about. And so we're currently in this crisis period. And the reason we are in this crisis period, according to the fourth turning theory, is that you have these generational cycles. And when they come together in a certain mesh, then you get a very fast movement in the society. That's where things have built up over a long period of time and then they come crashing down. And my question here is, have you thought about how social media plays into this? Because that book was written before social media. And I have a little theory that it could either speed it up, which I guess is the first order thinking. And then if you think more, then maybe it is that maybe it doesn't speed it up, but it rather creates these like different niches who combat each other, and it doesn't speed up, but like those different niches kind of take it out, if you understand what I mean.
You're correct. I mean, somehow social media is probably going to play into it, whether it speeds it up or slows it down. I don't know. It could go either way. But I think it's interesting with the fourth turning predictions that you see so much of it sort of, you see so many telltale signs now of the fourth turning that we're in. One is this whole Me Too movement, I think is very telling, because one of the predictions of the fourth turning was that as you get into the fourth turning, you're not going to have time for sort of trials and due process, go to court and everything. And that's what you see in the Me Too movement. You have sort of summary convictions. People are getting, if you're accused, you're convicted right away. It doesn't matter what the truth is. It's just, it's a very summary trial fashion. And that's, in the fourth turning, it talked about the demand and supply of order in society. During the first turning, you have a very high supply of order and very high demand for order. The 50s and 60s, we came out of the World War II era. All the great institutions were created, UN and all this stuff. And then the second turning, the supply is still high, but the demand goes down for order. So you had the 60s, liberation movement, women's liberation, and the sort of the flower power movement. So it's low demand for order, but still a high supply. And then in the third turning, you get low supply and low demand for order. You have the 90s, 80s, 90s with the deregulation and the freedom age, and the individualism and all this stuff. And in the fourth turning, you get still low supply of order, but you have a high demand for order. That's what we see now with the Me Too movement and everything. People want more order, they want more structure, but we have still a low supply of it. So that's what we're seeing now, I think.
Yeah, and I think one super interesting aspect of this is how most people, going back to what you were saying before about the importance of reading books, and I think a lot of people, they have a lot of shallow knowledge, but they don't have any strong patterns or models in their head. So everything seems new to them. And then because they do that, they think everything is new. And then because of that, they want people, some authority to simplify things for them.
Yeah, exactly.
And I think that's sort of what we're seeing social media do in a lot of cases.
Yeah, that's definitely true.
Maybe just because there is so much information available, you tend to focus more on the present, since even if all the information is available to you, there isn't room in your head for looking back more than a few years. I'm constantly surprised how new traders on the market, how little they know or remember of what happened just 5, 10 or 15 years ago.
Yeah, that's so fascinating, because in all other aspects of society, I mean, we always build on our knowledge. I mean, science and mathematics and whatever it is, we always retain the knowledge and we build upon it and sort of get further on. But in economics, it doesn't happen that way. We still make the same mistakes over and over again. I mean, fiat currencies have come and gone for many times, and politicians make the same mistakes, and voters make the same mistake over and over again. So it's very fascinating. But I think it's part of human nature. I mean, we're short-sighted animals. So
I think that one of the best things with the internet and social media is that you can find your own peers very easily. I can find people that are interested in weightlifting and quantum physics, which 15 years ago, it would be pretty hard to find that special group.
It's a very, very small group. It's like 2 people. You and another friend.
And I have something else to add to this, and it's that maybe the generations, the archetypical generations in Howe and Straw's theory, that they find each other and they bond even more closely now that they actually know exactly what they think. So they find each other on Facebook or Twitter, and they just keep patting each other's backs and cementing the generations even harder together. And that could create an even more intense fourth turning.
Yeah, exactly. No, that's true. I mean, you have this, the whole idea of common knowledge. Everybody knows about private knowledge and public knowledge, but then there's always common knowledge, which is different, because that's when you know something and you know that everybody else also knows about it, which is the case with the whole Me Too movement. I mean, everybody knew that Harvey Weinstein was a serial rapist. I mean, that was public knowledge, but still nothing was done about it. Nothing happened until you have sort of a missionary that comes forward and has a good platform to speak. And everybody, when this person says this, everybody knows that everybody else knows about it too. And then it becomes common knowledge, and then it sort of just falls apart, everything. So
I think that's really what we're seeing a lot when it comes to politicians, or, well, not politicians, I mean politics, and how to, question certain norms of society. That's something that's coming up there a lot. Do you think that history is a good way to predict the future, or a good way to learn from the past?
Yeah, I mean, with history is, it's all we have, really. I mean, we can only look at patterns in history and try to make predictions about the future. And I mean, but like they say, I mean, history it doesn't repeat, but it rhymes. So you have to always be careful not to extrapolate exactly, but you definitely can take some cues from history.
I think there is an interesting parallel here from David Deutsch, the author of Fabric of Reality. When he talks about scientific progress, he says that what true science does is not taking like historical examples and extrapolating. What it's doing is it looks at historical examples and finds an explanation. There's a big difference between extrapolation and an explanation, and the same goes for history, I think. And that's why it doesn't repeat but rhymes.
Yeah, exactly. No, that's true. And I think it's very important, the point he brings up also there, that scientific theories not only have to make good predictions and good explanations, but they also have to be hard to vary. That's a very, very important part of scientific theory. I can have a scientific theory that, the god Zeus makes the spring come, because at this every time this year this spring comes, and it gets warmer, and then Zeus makes the winter come during the fall. But you can change Zeus for any other name, it would still be the same theory. It would still make good predictions because I have this timetable, but it wouldn't be a good scientific theory because you can vary it any way you want.
Exactly, and then if you just change places on Earth to another hemisphere, and then you can say, well, he's sad during winter time or something like that. You helped co-found the hedge fund Lynx. Now it manages about $6 billion. Could you explain, what do they do?
Lynx is a systematic CTA, it's called Commodity Trading Advisor, which uses purely systematic models to make predictions on the markets. So there's no sort of discretionary intervention from the managers. All that is done is construct models that try to make predictions, and then you follow the models 100%.
So how long would you say the lag time from constructing the models until you, let's say, change the models due to changes in the market?
It's fairly long. I mean, we had a rule that you should only change models every 6 months, and I think they still stick to that. So you want to make small incremental changes to the models and not be too sort of eager to change, because it's very easy to change a model just because it's had a bad period, but usually that's the wrong time to change a model because it's going to start to perform again. So you want to be sort of slow moving and but still adaptive enough to pick up in changes in sort of big structural changes that come along.
The reason I'm asking this, I heard something quite annoying the other day in the media. The journalist was critiquing Lynx for not reacting in a sound way to the Volmageddon event, which is completely ridiculous if you know what Lynx actually does. And also, I just looked back at your history, and since inception, Lynx is up by about 500%. And the market is up by about 100%. And yet, just one poor month and a very weird way of interpreting it made the journalist question Lynx's existence.
Yeah, and I think this goes back to what you said before about the short-sighted nature of humankind. I mean, we really have a sort of recency bias where everything that's happened the recent month or the recent year sort of has a bigger weight than everything else, and that's a very bad bias to have if you're in the financial markets. Because you're going to make very wrong predictions. One
of the things they said was that Lynx has claimed that it's the low volatility environment that's bad for them. But now you get high volatility, and that's bad as well.
I think it's a fair point that they make because I mean, CTAs and trend following are supposed to make money when the volatility goes up. Now in this case, it was the stock market volatility that really exploded, and the trend has been so strong in the stock markets. So a lot of the models are just positioned for being long equities. But that's, I mean, if this persists, which I think it will, I think we're going to have going forward, we're going to have a more high volatility environment. I think, I mean, CTAs and funds like Lynx are going to do well. But you never know. I mean, it's that's what I think. But I could be wrong.
Are gold futures something that Lynx invests in? Is that a market that's included?
Yeah, they trade gold, metals, commodities. Not a huge weight. I mean, financials are big, have a more weight, fixed income and currencies.
But what kind of time frames do you usually think about or think in terms of?
I'm a bit, in my trading, I'm a bit more short term. I mean, the longest is like a few months holding period. So, but I don't look at sort of, I really don't, I'm not super short term, so I'm not in and out every day, but a few weeks to a few months like that. Yeah.
How about documentation or self-evaluation? Do you analyze what you do and like have some process for it?
Yeah, that's a very important part of what I do. Every month I have a log where I track the P&L of my trading every day and the risk I have every day. And at the end of the month, I also write down mistakes I've made or things that I've done right, and then every month I sort of summarize it in a summary sheet, and then I reset everything. So I start from scratch every month and begin the process all over, and then and sometimes I go back to the summary page and sort of review what's happened, what's gone right and wrong.
And do you have an example of a situation where you diverged from your normal rules and guidelines and that turned into a failure?
Yeah, I mean, that happens all the time. You make bad decisions and you realize afterwards, I mean, you think, well, why did I make that decision? And usually it's some sort of combination between FOMO, fear of missing out, and emotions get involved, and that's really when you typically make mistakes. And since I'm a discretionary trader, I don't just follow rules. I mean, I interpret the patterns, but you just try and learn from them and move on. But I mean, I make roughly maybe 10 trades a day, and I'm right about 60% of the time. That means that I have about 80 bad trades a month. So I mean, you have to learn to live with bad trades.
hopefully most of those 80 are still part of your due process and not due to bad decisions. No. I think that it's a very important distinction to make between bad decisions and decisions with bad outcomes.
Yeah, definitely. And then I know that when I have a bad trade, if it's because of a bad decision or it's just the numbers playing out. So.
Ja, det var första halvan av vår nya intervju med Martin och den första internationella intervjun som han någonsin har gjort. Så om du vill höra andra halvan av avsnittet, då kan du bara söka efter Future Skills på din podcast-app. Och det här är avsnitt 3.
Om du kollar beskrivningen av det här avsnittet så hittar du 2 direktlänkar. Den ena för iTunes och den andra för Android. Och där kan du lyssna vidare.
Ja, och i den här andra halvan då kommer Martin berätta om, bland annat varför de rikaste familjerna, de stora dynastierna, varför de har ägt fastigheter. Han kommer också berätta om vad han lärt sig och inkorporerat i sin egen stil från George Soros och Ray Dalio. Även hur han lägger upp sin arbetstid med tradingen och hur han förvaltar pengar. Och då har han har en särskild metod som han kallar för 30-30-30-10 och varför han gillar att ligga i badkaret.
Ja, han pratar också om hur man sätter ihop ett grymt team inom finans och bland annat hur han och Svante och Jonas gjorde på Lynx. Han går igenom sina 10 bokrekommendationer och vi frågar om nationalstaten kommer överleva de kommande 20 åren. Dessutom så pratar Martin om sin lite kontroversiella teori om sexrobotar.
Och vad som kommer hända när de når ut i mainstream.
Och Martin pratar också om de 5 viktigaste färdigheterna för en framgångsrik karriär de kommande 10 åren. Och det här tycker jag att alla kunskapsarbetare behöver lyssna på riktigt noga.
Så kolla in länkarna i beskrivningen på det här avsnittet för Android och iTunes om du har problem att hitta Future Skills episod 3 i din podcast-app.
Vi ses på Future Skills.
Hej då!